good evening, good afternoon. No clue what time you're watching it, but happy Father's Day for everybody that celebrates, and for you single moms, double holiday for you. Happy Mother's Day 2.0. No, there's a lot of you out there. So quickly, not going to waste too much of your time. Futures have just opened, and a lot of people will be looking at this and going, holy shit, we got a huge gap up. Well, rest assured, it is not a huge gap up. Futures contracts roll over because you are into quad OPEX this week. This is the second quarterly OPEX of the year. This is the first half of the year, and it is a major options expiration week. So rest assured, for those of you who have never traded an OPEX, let alone a quarterly OPEX, you are going to get shaken, stirred, fisted, punched in the mouth, and running around screaming, oh my God, look at how much money I made. It is going to go in every single direction for you this week. So please get ready for that and put your diapers on because you're going to need them. I'm going to go quick through this because there's really not much to go over other than what we've pretty much been regurgitating. This month of June, since that big bottom there on May 31, 51.91.68, which we knew was a bottom, we've had 3 red closes. Of those 3 red closes, not one of them has closed greater than minus 6 points from the previous day's close. Back-to-back weeks now, knowing that you are not going to close green better than 4 days in a row. Boom, 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 boom. Got your red close there on June 6th. Happened to get a red close there again on the Friday. And we got another red close on this previous Friday, bringing it to, again, that red close trade, 54.40, 54.35. Or if you wanted to take the bigger risk for a bigger decline, 54.30, 54.25, 54.35, 54.30. There you go. You got your red close. And coincidentally, because this is, the My Options Club / 32 Trades, Monday morning will be 32 consecutive trading sessions since the SPX has had a minus 1% intraday range day. Last one came here on April the 30th. Never had one during May, other than the fact that when we came to those lows there in May, very start of the month there in June, we came within 10 points of actually getting it intraday, but we never actually got it. CPI, FOMC, that was such a big bunch of shit. And we broke above that, what I was talking about, that 53.65 plus or minus 10. They gapped up above it, and that is obviously your primary zone, which I'll show you in a couple minutes. But yeah, you've got 32 trading sessions without a minus 1% intraday range day. Coincidentally, on Monday, tomorrow, 53.77 would almost wind up filling that CPI gap. So rest assured, everything is still there, copacetic. Bring you on to the SPX. 2 green weeks in a row after finally getting that red week over here, May 31, because I'm still not calling that May 24 a red week. We closed down less than a point on the week. I'm still not considering that a red week. So coming off of your April lows, 49.53, you've had 1, 2, 3, 4. Again, I'm not calling this a red week. Let's just not even include it. 5, 6. 6 green weeks with 1 red week and 1 week which didn't go anywhere, that being May 20th to May 24th, which coincidentally happened to include when NVIDIA reported their earnings, which was your big 84-point day there in the middle of the week. So where are we? Well, let's go look over on the IWM first and foremost. IWM, the weak red-headed stepchild, 4 red weeks in a row, and the first close on Friday below 200. It's been a while, since May 2, but first red close down below 200 on Friday. 4 red weeks in a row. which brings you over to the QQQ. And actually, I have a sponsor that is going to be involved. So I'm going to break here for 5 seconds. Actually, it's about 20 seconds. And we're going to get a word from our NASDAQ QQQ sponsor. So, if that didn't scare the shit out of you, the QQQ 479.26, a little bit higher there on Friday night, 479.90. 1, 2, 3, 4, 5, 6, 7. 7 green weeks, 1 red week, a nice decent red week there on May 31, after 20 trading sessions without a minus 1% day. After coming off of that major, incredible sell-off, going there into that April low where we bottomed there at 413, which many of you recall who were there, how could not stop pounding the table of how oversold we had become on the most important of all day trading, intraday, short-term trading timeframes, the 4-hour. So that's going to allow me to bring you onto the charts. What I'm looking at here is the NDX and the daily. And coincidentally, looking right here at this 19,848, we're at 19,664. But what I'm looking at here is the RSI. And looking here at your RSI on the daily, we ended the day on Friday at 93. We are almost as overbought as we were when we placed in that high back in November 2021. We are almost that overbought. Come over onto your, again, the most important time frame that there is, that being the 4-hour, and your 4-hour has gotten into the, we're starting to get a little bit too overbought level up here at 92, 93. Not as bad as it was as we were over here in middle of May, but we are definitely getting quite very, very overbought. There again, you're extreme oversold that we were over here back in April. And again, you're big oversold as we came down and put in that bottom there at the end of May before this move that we are currently in. So I bring you over to the QQQ, which is on screen all day, every day. And this move that we've got coming off of that May 31 low, very, very clean and very euphoric up into a new high, which took place after the close there on Friday, where you've got your CPI gap and you have your NVIDIA is the greatest thing in the world gap. Yeah, that's an old video from years and years ago, and thank you very much, Jim. That really did brighten up my day when I did see that. So what you're looking at here is how you can see this 461, 461, 462, very, very much support area as we were going into last week. This week, after the CPI bump, quite frankly, it's very clear that you've got a lot of euphoricness with the 5-day, 10-day, 20 days, not even able to be touched on any kind of dip. And how the rotation had been taking place over there between Microsoft, Apple, NVIDIA, Amazon, Meta, Google, which that'll give me another chance to take a little break here because we do have another sponsor coming up in a couple of minutes. The NASDAQ 100 components, looking at the weight of the NASDAQ, and you see here, NVIDIA is now the top weight, Microsoft and Apple. 8.5 plus, 8.5 plus, 8.5 plus. So it doesn't take a rocket scientist to go out there and say 8.5 times 3, that's 25. These 3 stocks make up 25% of the NASDAQ 100 QQQ. Now, you go ahead and take those, again, 8.5 times 3, let's just call it rounded off. Then add in your Amazon, plus 5. Add in your Meta, plus 4.6. Add in your Google, plus 2.7, plus 2.6. You're at 40%. Now fill in the blank with whatever you want. Tesla, Netflix, AMD, they kind of all roll around. Broadcom, AVGO, I personally do not even bother with it because it's a $1,700 stock. And anybody that's involved in trading Broadcom, I think you need to call somebody and go get your head checked because that's just ridiculous. QQQ, a hell of a lot cheaper. You're going to get the same play on it. So come over here and you look at your NASDAQ component year-to-date returns. NVIDIA, CEG, Micron, Broadcom, you've got your big names that are all up there with major returns on the course of the year. And then you start coming down into the latter half, this 57 down to 100, and you see red. Now, granted, it's less than, or call it right around 50%, just a little bit less than 50% of the NASDAQ QQQ is red on the year. Everything is in these 3, 4, 5, 6, 7, whatever, 8, 9 stocks. It's all right there. All of it is in there. And this is why the QQQ remains to be the primary focus, because the reason I took those 475 puts for this week, Friday, June 21, is all I was considering was how much is the price and what is the top of this gap? The top of this CPI gap being 471.26. So if I bought the 475 strike and 471.26, the top of the gap over there, that's 3.74. So the minimum that those contracts would be worth would be 3.74, touching the top of this gap, not even filling it. Filling the gap, looking at an easy 100% plus. So that was my rationale and my purpose for taking the trade on for this week, Friday, which with 32 trades, as you know, I typically wouldn't do these kind of things. And then you come over to where we are right now from what we've been tracking, which is this bounce wave. And we've got our clean 1, 2, we've got a clean 3, very, very shallow 4, and then this blow off steam over here on the 5, where, yeah, we could make it up to 480, and we've made it to 479.90. 480.68, quite possible, quite realistic. But zoom out and see where you're at, see where you're coming from. Go back here to April, to the bottom. And we'll just look here at a 30 minutes, see if it all fits. And it all fits. All of it fits. Everything fits that we should be looking at ourselves at a very prime location for calling this to be the top of what it is. Up above, absolutely. We could get up there to 484. It's quadruple OPEX week. We could do a whole lot of things. But my concentration, like I said, I'm simply looking for a dip down to around 471. We get anything below 471, we obviously know that we have ourselves a little bit of a catalyst. Get into this 465 area, which was resistance. We're definitely going to be expecting 461 to be support. This is short term, okay? So having shown you that and having shown you this, I now need to go over to our second sponsor for the NASDAQ QQQ.
Listen up, y'all, cause this is it.
And if that was not, oh my God, as fake as the previous sponsors, oh my God. Take a look at this. Like I say, take a look at this. Shared this with a few of you. Coming off your October 2022 lows, right up there into your July highs, down into your October lows. You got a perfect AB where C 100 extension would be right at 476. Look at all these gaps. All these gaps. Because all of these gaps will get filled. It's just a question of, is it going to happen in a month? Is it going to happen in a year? Every one of these gaps will be filled. So let's zoom that out a little bit more and look at what we got here. If we're looking at this as coming off the COVID lows, which did break quite a few bullish levels. Coming off our COVID lows into our 2021 highs, down to the 2022 lows, an ABC on that would be right up at 498, where coincidentally, looking at this from a 1-2, almost violated, call it violated. 3, 1-2, have your 3, here's your almost violated, and now here you are, your 484 coming off of the COVID lows into the September highs, down into October lows. 484. So we're in a prime real estate area right here. Prime real estate for saying, you know what? September, December, January, all of that shit looks damn good. And we're up 88.5% off of the October 2022 lows. We're up 190.58% off of the COVID lows. And all of these gaps will get filled. Period. The end. So it brings you back over here to looking at your NASDAQ and seeing, okay, the 4 hour, yeah. The daily, oh, definitely the daily is overbought. Looking at it from a wider point of view on the daily, oh, yeah, look, we are almost exactly as we were when we went up there into November of 2021, which was the all-time highs. Let's look at it from a weekly point of view, which I haven't looked at yet. And look at this sell divergence that you have on your weekly, dating all the way back to June of last year. I apologize, but that sits there and screams to me that if you're not taking the QQQ seriously, something's wrong. So I'll leave you off quickly. IWM, redheaded stepchild. Got our close down below 200. Looking at this just from a very short 30-day view. Coming off the highs over there in May, looking very clean as a continual move to the downside. Obviously, we are starting to get a little bit oversold, but we are starting to press down on major breaking points. Breaking down below that 199.40, which is a 2024 open, we should still see a visit down here at 196.40. Zoom out a little bit more, start looking at this, and you can see, actually, I'll zoom it out even further than that. For the course of this year, we have literally gone absolutely nowhere. You get to 207, you get short. You get down here below 193, 192, you start looking at support because you're oversold. 200-day moving average happens to be down here just below 192 at the moment. But like I said earlier in the course of last week, you got your bearish cross with your 100-day and your 50-day crossing over. Actually, no, you didn't. That is going to be taking place over the course of this week. Come on. Yeah, right there. Your 50 and your 100-day will be crossing over bearish during the course of this week. Your 200-day moving average is down there at 192. So you've got a little bit of down space still to go over there on the IWM. Come over onto the Dow, and obviously understanding that there is a very slight possibility for an upside projection on the Dow, where this was the 1, this is the 2, and a break above 392, and we are starting to look at progression towards the upside to take out 400. It doesn't fit. As of now, with everything as bearish as it is on the Dow Jones, I can show you some names that are ridiculously below their 400-day moving averages. 200, 150, you name it, they are all down well below it because that is your weak link at present. And when you come over to the Dow, you're looking there at UNH, top weight, Goldman Sachs, second, Microsoft, Apple down here at 11. You got to balance as far as weight goes. But then when you come over and you look at the Dow and you look at who's got the biggest returns on the year, you got Walmart, you got Amazon. Okay, you got American Express, Goldman Sachs, JP Morgan. We've been watching JP Morgan take a very decent decline over recent days. Disney, only because it's Pride Month. There's your Apple, Caterpillar, which on Apple was red year to date the morning I decided to get into those July 19th puts. Red on the year. And then you got your AI. So, anyway, the Dow is undoubtedly looking at a downside move, a break below that 382.64, push onto that 381, taking out what was the May lows over there, May 30th. We're going to be looking down there in the 370 area. That's what we're projected at for the moment, but there's still more downside behind that. It'll all simply depend on, how aggressive the rollover takes place with Microsoft and Apple, if it even takes place. So I bring you over onto the SPX, and yeah, you're looking at a little bit too much detail for what most of you want to look at, so we'll zoom it into the 5-day. 5-day, we are well above the 100-day moving average. We are well above the 50-day moving average. We are well above the 20-day moving average, which takes you down over here to last week's lows. Last week, or not even last week lows, June 11th, earlier in the week. You've got your big CPI gap, and as you can see, all we're doing is coming down, touching the 5-day moving average, touching that 5,400 area, not breaking it over the last 3 days, and we're just cruising along. But from a view on this, which it fits. We got our 1, 2, 3, 4, 5, and now what we need to see is that breakdown, as I'll show you here, back down into this 5350 area. A breakdown into the 5350 area, more significantly, a breakdown below that 5340 area, and the bulls start getting a big warning. As we talked about before, that 5302, 5165, much bigger, broader, wider picture for the downside move. But again, where we're at for the course of the month, just the course of the month, we started at, well, that's not going to show it to me, so let me go just and make it so that you can see it. We started at 5297, June 3. Yeah, 5 minute of work. Oh, yeah, 5297 is where we started the month. We dropped down to 5234. We've made it up here to 5447. 5447 minus 5234. We already have 200 points in for the month. So there is a possibility that the month is done. And as many of you know, we're going into the full moon that comes on Friday, June 21. So very good possibility that we are getting into that very tight cyclical range of when we start looking at a top or a bottom being placed. And then from there, there's a window. And that window needs to be taken advantage of. And that window being taken advantage of, meaning we need to be seeing SPX closing the CPI gap, getting back down below that 5350, 5330, unbroken sweet home Alabama, and then we can start thinking we actually have a move to the downside, looking for a breakdown below 5286, down into that 5165 region, and most likely will be oversold by that time anyway. So that's what we've got. That's what we're looking at. So IWM already wants to commit to the downside. The Dow Jones has already started to and wants to continue to commit to the downside. The SPX, you're not going to get any kind of downside until you get the QQQ. And the QQQ from a weekly point of view is not going to help you day trade it. The QQQ from a 4-hour point of view will help you to an extent to be able to make decisions for the medium to short term. The QQQ from a daily point of view is sitting there and screaming to you, motherfucker, if you don't think that September, December, and January are actually going to come this year, that the world is going to end, and we will never see September, December, or January, then why in the hell aren't you focused on September, December, and January, and taking advantage of where we are on the QQQ by getting yourself into some 440, 450, 460, even fucking 470, 475, even 500 puts, and protecting your capital and riding this fucking bitch down for when it does take all of these gaps down that we're at right here and start showing you, holy shit, holy shit, holy shit.
Look.
Ay!